Why gold's record high might be a dangerous buy right now. Gold, the timeless symbol of wealth and security, has once again made headlines. The price of gold recently crossed the $4,000 mark per ounce, an all-time high that sent investors rushing in. But here's the twist. This record surge might not be the golden opportunity everyone thinks it is. This video explores why this historic high could actually be a risky time to buy gold, and what smart investors are doing instead. Why gold prices are so high. To understand what's happening, let's start with why gold prices are soaring. First, inflation fears are back. Around the world, central banks are fighting rising prices with aggressive interest rate policies, and people are looking for safe havens. Second, geopolitical tension, wars, trade disputes, and elections has made investors nervous. And third, central banks themselves are buying record amounts of gold to diversify away from the U.S. dollar. Add to that weak currency performance and slowing economic growth, and you get a perfect storm driving gold upward. The hidden dangers of buying at the top. But here's the problem. When everyone starts buying, you might already be late to the party. Historically, gold prices tend to rise fastest right before a major correction. In the early 1980s and again in 2011, gold hit record highs, only to drop sharply once the panic eased. This happens because emotional buying pushes prices beyond real market value. Once stability returns, investors sell to take profits, and prices fall back to normal ranges. If you buy gold now, you could end up holding it at peak prices for years before seeing real gains. The real cost of gold ownership. There's also the cost of holding gold. Gold doesn't pay interest, it doesn't yield dividends, and it costs money to store safely. Unlike stocks or real estate, gold doesn't generate income. It simply sits there. So when you buy at record prices, your returns depend entirely on finding someone willing to pay even more later. That's a risky game to play when the price is already sky high. Smarter alternatives. So, what are investors doing instead? Many are shifting toward diversified assets, a healthy mix of equities, commodities, and cash. Others use gold exchange-traded funds for smaller, safer exposure without the burden of physical storage. And some are waiting for a price pullback, a correction that almost always follows a major rally. The best investors don't chase trends. They anticipate reversals. Conclusion. Gold remains a powerful store of value, but timing is everything. With prices at historic highs, this may not be the moment to join the buying frenzy. Instead, stay patient, stay diversified, and think long-term. In the world of wealth building, the smartest move is often the one you don't make. If you found this helpful, subscribe to Money Talks _HQ and share your thoughts in the comments. Until next time, stay informed, stay wealthy, and let money talk.